Well, thank you, everybody, for joining us for another episode of Insurance Gone Wild. I'm your host, Dennis Settlemoir. My lovely co-host is
Stephanie Lencioni.
And I'm going to say it, Stephanie Lencioni.
Nailed it.
Lencioni. Lencioni or Lencioni?
Do you want the real way or do you want the Dennis way?
Yeah, well, I mean, whatever. I mean, I'm a little bit of redneck, half hillbilly. What is it?
I mean, I don't want you to ever get it right now because then that would ruin our whole thing. But think of Lencioni. Going to go eat the pasta, the spaghetti.
Yeah, that's a long way from your maiden name.
Oh, legit. My maiden name is White. Yeah, we don't get much whiter.
Yeah. I heard that.
Yeah,
so
but
anyway.
Lencioni, come on.
Lencioni.
See, it doesn't even feel good.
That's a thing
Just
now. At the beginning of every episode, we've probably got people that are listening to this that are fast forwarding through the first.
They need to 30 seconds.
30 to 60 seconds of this.
And they're like, we get
stuff.
it, Lencioni, move on.
He's gonna say it. So
forget about it.
It's good. Forget about it. All
anyway.
right. So we were going to talk a little bit about today about a couple of different things. We're wanting to share with folks some of the things that we are seeing in the marketplace. We've talked a little bit about this before in the last month or so, but kind of just reiterating it maybe a little bit, reaffirming it, what we're seeing, what our clients are seeing, what our
salespeople are hearing. So it's coming directly from the mouth of the babes type thing. So
correct. And so we had a meeting with everybody this morning, and it was a good meeting. I mean, we usually try to keep it lively and have fun, and we are.
I think we accomplished that part.
I think so. I think our approach is, we want to make sure everybody understands what we're getting at, but have fun with it at the same time. So, but it's tough out there. The market is very, very, very tough out there. There is a lot of changes that are going on, and people are looking for ways to save money because these premiums are getting
they're nasty. Yeah. Because it's not even that the premiums are going up. And from there you can be like, okay, yeah, sure. Well, everything's going up, but it is that it's inflation accompanied with shrinkflation all at the same time. So the prices are going up and the coverages are getting worse. So it's not even like, oh, well, I get to pay the same price, but maybe some coverages go away. Or, okay, well, I have some really good coverages still, and then my policy just goes up. We're getting hit from both sides.
Correct.
And in the insurance world, and especially the home, and this truly is specifically geared toward homeowners. Auto is the same. Auto is what it is. And,
yes.
So that part's fine. At the moment. Yeah.
Yes. But
it really is, this is specifically geared toward the homeowners. Right.
Correct.
So, and in the Dallas-Fort Worth area, the surrounding counties, it's your wind and specifically to this, it's your wind and hail. It's your roof coverage, right? Mm-hmm. Your water coverage is going to be there. That's not getting messed with. It's your roof. And that's the thing, because in North Texas, that is the most likely loss. So what are we hearing from this? What's going on?
Let me wade out into the ankle deep grass of something you just said.
Oh.
Not fully deep in the weeds, but in the ankle deep grass.
Because
you know me, I like to get in the weeds because I like to talk about this very specific. Water is changing also.
Is it?
Yes. They're putting sublimits on water of how much it'll pay out.
Okay. So
not every company.
Okay.
That's
I was like, that seems like that's a little bit of a forefront thing.
No,
okay.
It's been going on for about a year, and it's not overly popular because, as you know, water has tipped water damage. So I won't get into that.
Hang on. Let's pause on that for a second and let's talk about that on another episode specifically.
Yeah. Okay.
So
All right.
just so we can.
I'm good with that.
Yeah. Okay.
I
think there's enough to probably then talk about specifically about, hey, how are your policies changing based on water? But as far as your North Texas, your
wind and hail is definitely the biggest thing in North Texas.
Yeah.
These 5 counties: Dallas, Tarrant, Collin, Denton, and then some companies, Parker,
and then Johnson. You got Johnson right there.
Johnson's not as bad, but Rockwall sometimes falls in there.
Okay.
But Johnson and Rockwall are probably about even whenever they show up. They don't always show up. It's usually 4 to 5 counties, and that's it.
Okay.
But yeah, occasionally Johnson and Rockwall show up. These are tough counties. We have over 40 companies for just homeowners insurance. Over 40. I don't know if you knew that or not, but over 40.
I do.
And there's only a handful of them that are writing in these counties. Now, some of them have pulled out of Texas completely right now, or they haven't pulled out. They just said, we're no longer writing.
Yeah, we're not doing new business.
We're not doing new
business. We'll continue to
business.
renew, but we're not
Correct.
doing new business.
Pull out means they're done. They're out of here. They move on. So they've just paused new business, but they've been paused for like 2 or 3 years. So they're basically saying
because they want to survive as a company.
I get it, but clients don't give a rat's patootie about that, you know. So, but
I've never heard you say patootie.
Patootie.
It's a first for me, and we've gone through a lot together in our time together, and I've just never heard you say patootie.
Well, it was better, I thought, than saying a rat's ass. But anyway, you know.
And then we got there anyway, so it was perfect. That's really what that was my whole goal, is I needed to get you over the finish line.
Everybody knows what that word means,
exactly.
But everybody knows what patootie means.
Patootie
so there you go. You've been on an educational journey today.
There you go.
But yeah, I mean, it's tough. These 4 or 5 counties are very, very hard. And why are they so much tougher than other counties? Let's say as you get close to the Oklahoma border, because we got so many people here. The exposure to the insurance companies.
Yeah, everyone's house is on top of each other.
Right.
We have 0 lot lines.
Dang near. Yeah.
I mean, that's truly what they're called. They're called 0 lot lines. So you have no backyard.
True,
You have
there
no
are zeros.
Yeah, you know what I mean?
Yes,
like that's the whole concept, and that's especially about I don't know, maybe 5-10 years ago, that was the really big push, is that people didn't want yards anymore. So or it was the builders who just wanted to capitalize the most on the house. It doesn't matter, but 0 lot line, no backyard. Here's your big house.
Yep.
On a 5,000 square foot lot.
See, I want land.
And then build up.
I want land. That's what I want. I don't want
I don't want to hear. Yeah. I had to go up. We were not on a 0 lot line. But when my son was going through all of his things and we had to take bandages off after a surgery, which by the way, was that not the most pleasant experience ever as a parent and just a human being?
But yes, I know what you're talking about.
He is screaming like bloody murder. It is so loud. I'm like, we literally on neighbors on either end. And now where the bathroom was, the neighbors over here, I had to go over to their house and let them know that we were not abusing our child, because you are that close in the city, in this even suburbs and things.
Sure.
And you hear a child scream like that and you're like, I think I should maybe call some authorities. And I was like, hi, FYI.
Yeah, I have so many stories about me growing up with that kind of stuff happening. I'm just saying, it's glad that I grew up in the sticks.
Yeah. No, but yes. So point is, like, you close. Everyone's
I got PTSD kicking in over some of that. You made me think about that particular aspect of a little kid being.
Is there an insurance policy that can protect us against that?
No, but there's a law.
Okay. All right. Well, that's fair. Anyway,
no, I get what you're saying.
So we're very close together. No. So yes, there's that. And then I'll also say the other part of that is we do truly, this area gets hit. We get hit.
We do.
Hard.
And
all the time.
I don't know that the majority of the people probably don't realize this, but you get into these big cities generate their own weather patterns because of the heat. They came across this, they studied years ago, they studied Atlanta, and they noticed that Atlanta was creating its own weather patterns. Well, DFW does the same thing. Dallas-Fort Worth does the same thing. Have you noticed this? I have, because of the houses, but because we do the homeowners insurance, but it used to go mostly south of us. The big storms, Burleson, Arlington, Mansfield. It still does. But now, what do we got along 380? Highway 380. That's Tornado Alley, man. Hail Alley.
You know what's crazy, though? Just not far from my house and across the street from my parent, and now a big street, right? They're in a pocket neighborhood, my parents are. But we were talking about this earlier today, but a tornado blew through and destroyed a building twice within a 4-month period. And that's 2 miles from us right now. In the middle of town.
Yep.
Because tornadoes do this thing. It's not, and then everything. I mean, it really is. They're finicky little creatures, but it is. So we're Tornado Alley, and then
and all
it hits
of that,
anywhere.
All of that affects all this strange weather pattern and things that we're talking about right now affects your premium.
It does, because the
county that we're in, the county that you're in affects your premium. The zip code that you're in affects your premium. And I've even seen it when we were with
other company
Z, let's call it.
Sure.
Company Z. It could be one side of the street affects your premium.
Yeah.
I saw that. There was a street in Irving. One side of the street was good premiums. I had 3 or 4 people on. I had 2 on one side, 2 on the other. The 2 on the north, on the west side.
Neighborhood insurance party?
Yeah,
Jesus.
pretty much.
Nice.
I had the 2 that I had on the west side were decent. The 2 that I had on the left side or the east side were higher.
Yeah.
And the only thing I could figure out is they were 20 feet closer to a lake, which insurance company's not going to pay for flood anyway, but they use little things like that to look at their actuaries.
So that's actually a perfect segue into what one of our producers was asking about today. And they're like, can you guys talk about this though? Because we're getting so many questions where, she handles a lot of our renewals and she's contacting the clients and they're like, well, wait a second. I was talking to my neighbor and my neighbor is paying, where to make up numbers. I mean, clearly nobody's paying $6,000 a year.
Where were you going with this? Now I know where you're going.
Yeah. So
why is my neighbor
you've got your neighbor paying $3,500. I'm paying $6,000. Mm-hmm. Why? Mm-hmm. We're even on the same side of the street. How does that even happen? Mm-hmm. Dennis? So what would we say to those?
You want me to get technical or just say?
Okay, maybe it's Stephanie. What do we say? So I'll ask myself and answer my own question. But the answer is,
go ahead, because I'm going to get technical if I start
talking. Yeah.
Yeah.
So many factors.
Correct.
So the house next to me, just where we are right now, the house on the right or whatever side is 25% bigger. Mm-hmm. Okay. So number one, there's that. So you have size of home. You do have, what is inside. If it's an older neighborhood, has somebody remodeled, not remodeled. You have credit is taken into account, right? Personal credit.
That's correct. And
although that is, and you've said like some of them weigh more heavily than others.
That's correct. Credit is weighed differently with different carriers.
We have fantastic credit and we are still getting screwed. So to that.
I have not.
I am so mad about my damn insurance I will talk about this until my renewal, and then I will bitch about my renewal. That's all I can tell you. I am so mad. I hate insurance, damn it. This is crap.
Hey, at least it's not health insurance. That gives me
that is the worst. Who would even do that? It's
like be a migraine.
I know, Dennis, we were talking earlier and you were like, it's right here. We start talking about it and it
was mentioned and I felt that little
right
vein.
Here. I know.
I wasn't joking. I literally felt that vein start popping. I'm like,
you're like,
no,
we gotta stop.
Health
insurance. We gotta stop.
Let's move on. No, you are correct. You're correct. Okay. So keep going.
Okay. So credit can be a thing, although whatever, but, do you have a pool? Do you not have a pool? What is the age of your roof? What kind of roof do you have? And dogs, right? So that's a thing. Do you have solar panels? Some companies won't write you if you have solar panels.
You have kids?
Do you have kids? That is a thing.
Why would kids make a difference?
Well, Barbie turns out does not flush well. And so, no, but you get the toys and the things and the incidents.
They may burn the house down too.
Yeah. The trampoline. Do you have a trampoline in the back? It's not that you can't be covered, but that's a liability. So it's all of these little things that it's not just a matter of, well, we're neighbors, so we should pay the same. Like it's not straight location. There are just so many other factors that go into it.
I won't get into the details of what you just talked about, but I will say this. I have had over the years a plethora. Hey, like that word?
I do like that word.
Plethora?
I like that word a lot.
A plethora of folks that we've had this conversation with And they're like, well, my friend is only paying blah, blah, blah for their auto insurance. You've heard that.
Oh, a million times.
Well, I can't tell you what coverages your friend has, but if I can find out what coverages your friend has, I'd be willing to bet they don't have the same coverages as you.
And I will say, and then that is the not final piece, but that's another big variable.
It's a big piece.
It's a big piece. It
could be credit. It could be driving record. We don't know what is causing the rate to be what it is because they don't tell us. We've talked about this in the past. The magic 8 ball. You put all the information, you shake it up, and you see what flows to the top. We don't know what goes inside the 8 ball.
And that's the thing. And there are some things.
We know some of it, but not all of it.
And some of it. And I have to tell you, so we have 2 clients, and I know them both personally, but 3. We're going to do kind of a triangular thing here. So we've got an all about the same age-ish. So, because age can be a factor. Age can be a factor when you're younger, and age can be a factor when you're older, right? Mm-hmm. All the things.
Correct.
No young children in the homes. You have 2 single women, and then you have 1 married couple. And they're all kind of in the same area. And it's one company, and there's one single woman. It's going to get a little convoluted, but one single woman, her renewal with this said company, we're going to call it Company X, and with us, basically doubled. So for a single person, 1 car, full coverage, it was over $2,800 a year.
Okay.
No claims.
Okay. Little over $200 a month.
Over, yeah. I mean, you're talking car? $250. Yeah, 1 car, single driver, 1 car, $2,800 a year, and I'm actually rounding down because I saw the numbers.
Okay,
but easy numbers. But we're rounding down, and over here we do have we're probably 5 miles away, same county, but 5 miles away. Single woman, 1 car, had a claim. Mm-hmm. Had like a $16,000 claim at fault just on her car, and then not counting the other people's cars.
Cheaper? Half?
A third.
Yeah.
In fact, her policy with said company, with Company X, during renewal, not only didn't change, it did change. Mm-hmm. It went down. Mm-hmm. It decreased. And this woman over here had a claim.
Can't answer that.
Fault. And those are the things where it's like, guys, we can't answer that.
Can't answer that. It doesn't make any sense to me.
It doesn't make sense.
When we were with Company Z.
Oh, let's call it Zombie.
Okay. When we were with Company Zombie, I saw that all the time. And because they wanted married. That's what their better deal was, with no accidents. Okay. Well, doesn't every company want married with no accidents? Okay.
Sure.
So I had one couple who was in the early 50s, had vehicles. I had another couple that was in their 30s with vehicles and accidents. It was half for the younger couple as it was the 50-something-year-old.
Man, I'm telling you what, like,
I'm like, that doesn't, and I called underwriting. I'm like, what in the
heck?
What
in the plethora? I'm just kidding. It's just a fun word.
Yeah, I know. What
it's not
in
the right meaning. I know
going on with this? Yeah. They couldn't tell me. I'm like, you're underwriting. You've got to be able to.
No, and they don't know because it's still the same system. They're not the actuaries, right? So underwriting is different than the actuaries, which is different than
the only thing I could think of. They had to be a major credit difference because that company was big on credit.
Yeah, for that. But but this is the same company. 2 single people, women. Basically the same area, one with an accident, an at-fault accident that company paid for. That company paid for it. And then they renewed her for $200 less.
Now,
which made it then truly less than a third of how they renewed the other woman.
Things that go through my mind. I understand what you're saying. So things that go through my mind.
What do you say to that?
First of all, I'm wanting to know, okay, when did the accident happen in relation to the renewal?
Yep, we talked about that.
Okay.
And I'm here to tell you.
There was enough time?
100%.
All right. So
100%.
What I'm getting at, folks, if you're listening to this, is that sometimes you can have an accident really close to your renewal date,
and it doesn't
where
show
your
up.
renewal is already calculated, so it's not going to hurt you.
No.
It'll hurt you at the next renewal, but not at that particular renewal.
And that is not the case here. So it was an annual policy, and the accident for this one was probably 7 months ago.
Yeah, I can't tell you why. I don't think anybody can, except the actuary that came up with the rule.
Well, and they can't even, because they'd be blowing smoke, because it doesn't make any sense.
Well, the thing is, they wouldn't even tell you, because they're too busy looking at your ankles. They don't look at your eyes, because I
have very nice ankles.
Well, yes.
This one I think is kind of broken, but it's fine.
But the thing is that they're just number crunchers. That's all they look at.
Yes, but at the same time, again, I think so. The whole point to all of this is, when talking to consumers, when our people are getting these questions, when we're getting these questions in different aspects, because I got pulled in because I had the relationship with it, and I'm like, hey, I don't handle the home and auto and all the things. But I will absolutely step in. We'll have conversations and walk people through it. And bottom line, we can bullshit back and forth, but we're not going to bullshit the client. And quite frankly, at that point, we look at the client and we're like, I have to tell you, it just doesn't make sense. I don't know. And there's not a way for us to ever find out. But all I can tell you is these are the numbers. And now what are we going to do about it? And now we have to just come up with the plan of what are the next steps, because insurance doesn't make sense right now. Home and auto insurance, at least in the state of Texas right now, but I have to imagine it's kind of everywhere. It's
nationwide.
Yeah. But speaking to our specific market and not trying to be an expert everywhere, but it doesn't make sense right now.
Yeah.
And so you have to find who's going to be real with you, who's going to have the conversation and listen. And quite honestly, and part of it, our lady, do we say her name? I don't know, but she was great. She was like, I'll listen to people complain. I know that's part of my job right now. And we're a little bit of just, free therapists.
Our retention specialist.
She hears it's not a happy job.
No, she does a great job.
She does a great job, and it's not a happy job.
Yep.
And we get it. We empathize. Have I told you that my agent actually found a policy for $6,000 for me for my homeowners?
I don't know if you remember the first time you brought that up. The first time you brought that up, I went, only $6,000?
And that pissed me off. And I was like, listen here, mofo. I don't want to hear that.
I know.
It's so bad.
You know what's going to really upset you if you walk over to your neighbor and you find out they're paying $4,000 for the same size house.
I'm already mad with. And that's where I try to be really good when clients call and they're like, hey, again, because if I'm the one who sent them to, they came to us through me or whatever. And they're like, hey, can you just my renewal's kind of coming up and let me know. And I don't know, it went up about $600 and I'm a little bit, I just want to make sure we're shopping. I'm like, $600. You freaking chumps. I would kill for a $600 increase. I had a $2,600 increase.
Mine's close to that. I've already got my renewal. It's over $6,000.
Good.
But my house isn't
really? Is that it?
Is that exactly. My house isn't as big as yours.
And I don't have a big house.
I know.
We live very modestly. We're very, anyway. I will say I love my home. I love it. I love our neighborhood. I love all the things except my homeowner's premium.
I got a client that called me this morning and he's like, Dennis, I just got my renewal from company A and it's over $6,000. And I'm like, well,
ooh, you skated by pretty clean.
I said, well, client, I pay $6,000 and I'm in the middle of DFW. You're up along 380 in Tornado Alley. Mm-hmm. I think you should be happy with what you have. That's kind of what I told him. Not nicely. Those words,
but at the same time, we still do shop. We're going to do we're going to shop everything.
Yeah.
But it is,
and the benefit for him is that he could raise his deductible if he wanted, even though it's at 3% with company A, because they do building and they do builder stuff like that. So for him to re-roof his own house is not that big a deal. As long as he get enough money to pay for materials and a little bit of labor, he didn't care if he makes any money off it.
Right.
He does do it himself. But so he's a little bit different situation. But I sympathize with him because there's literally only a handful of companies out there that are writing right now.
Yeah. And then, so one other thing I want to talk about, and then I want to get into a wheelish situation, but we've talked about it a little bit before, but it's such a hot topic and it's so important, and we get it because people are feeling it so much right now. But the roof coverage is changing. So even if you have, whereas 5 years ago, you got a brand new roof, your premium, even though you made a claim, typically would go down.
It would. And it
because
still
you
does.
had that.
It still does to an extent.
Can everyone see my face?
No, it does. If the agent will tell the insurance company.
We do. I listen.
If the
I'm
agent will tell the insurance company.
Anyway, but it used to truly be cheaper premium, not cheaper than what the renewal would have been, but cheaper premium.
I agree.
And it's not anymore. That's now at this point, all you're doing is mitigating your increase.
And I think that
there's a big difference there.
Let me say this. I'd have to go back and look at the numbers, but my gut is this: the discount's still significant, but the increase is more than significant.
That's my point. But that's exactly my point, though, is that truly 5 years ago, it was you make a claim, you get a brand new roof. You literally are then paying at renewal less than what you paid the previous year. Yep. And now it's, your increase is only $600. Congratulations on your new roof.
Yep. Yeah.
And there are companies now that are scheduling from day one.
That is correct.
So
we have some of those. Just
to very quickly, because we're a little bit at time, but you have replacement costs and then ACV, which is actual cash value. So actual cash value is how your car is paid out. If you have a 2020 vehicle, we're in 2025 right now.
They're going to depreciate
They're going to depreciate it. So it's whatever that, however many miles you have, the condition of the vehicle, it gets totaled out. They're going to pay you for the value of what that car is worth
it's a little
today.
Bit of a moving target.
Yes. And then
they're scheduled.
Replacement costs would basically be saying, you had a 2020 Nissan Rogue. Perfect. We're going to replace it with a 2025 Nissan Rogue. That's not how auto insurance works, but that was how, and is to an extent how the roof replacement works, right? So you have a roof that's 10 years old. If you have a policy that's replacement costs, they're going to pay for the full value of the cost to get it replaced. But right now, a lot of the thing is the companies are trying to mitigate their loss because they're getting killed. So deductibles are higher, which means now instead of 1%, but 2%. So you have a $500,000 house coverage.
Instead of $5,000, it's a $10,000.
It's $10,000.
And some companies will even do a 3%. Now it's a $15,000 deductible. And if they do scheduled roof, that's even more. So you end up with almost zero coming back to you buying your own roof. So scheduled is very much like depreciated, except depreciated for an actual ACV policy, actual cash value ACV, is a little bit of a moving target. Whereas scheduled is like, it's basically saying, hey, we're going to reduce the amount we're going to
based on age.
Pay out based on the age of the roof. And it's usually most companies in Texas, most, not all, but it's about 3% per year.
Okay.
So a 10-year-old roof is going to be 30% plus your deductible. So they're only going to pay 70%. Minus your deductible, you're basically paying at least 50, 60% of your own roof.
Yeah. So if it's a standard 3-bed, 2-bath house, any $20,000, $25,000 roof.
Depending on the roof, yeah.
Right. So about to pitch and all the things, but let's say $25,000 at 70% of that. What is that? 25. So that's $7,500. Wait, right? Yeah. $7,500 getting negated from that. So now you're at $1,750. Plus you
what year?
Is 70%. So 3% of that is 2,500.
It would be 2.5 times 7, which is $15,000. So 25,000 minus 15,000 is
10,000.
10,000 minus your deductible. You may not get anything out of it.
Well, hang on. No. 25,000. Can somebody pull out a calculator?
Paul, you got a calculator?
What is 70% of 25,000? It's 1,750. 17.5. Because it's 20. It's
I was thinking. Okay, you're correct.
Or is it 7? No. Yeah, 30%.
17.5. You're correct.
Buy me a drink. You owe me a drink.
Okay. There's some in there.
All right, I'll get that. Okay, so 17.5, but then you have your
deductible on top of that.
At 2% at dwelling coverage of 500,000, which is pretty standard for a 3-bed, 2-bath in the North
Dallas
Texas area.
So now you're at $10,000.
And now you get a check for $7,500.
Yeah, how's that make you feel? The roof costs $25,000. You got to come up with the difference between $2,500 and $7,500.
I'm not warm and fuzzy, I'll tell you that.
No, so we have programs to help with that. People will call us. Yeah, we've talked about that before.
Yeah, we'll talk about it later too.
But we need to get that information out there so people can understand. We make almost nothing off these. These are giveaways.
It's truly a giveaway. It's a layup.
It's a giveaway. Matter of fact, we make maybe $10 as an agency. I mean,
as the owners,
because
our salespeople make maybe 50. Which is nothing. That's not going to feed them. That's not feeding their family. Like this is not paying for anyone's Christmas or holiday vacation.
We throw those. But what that is
the
to
customer.
let you know it doesn't make a damn to us if you get it or not. But it makes a whole lot of difference if you get it. These
to
policies.
You, yeah. 100%.
So I mean,
we'll talk about those.
We're open with that. So anyway, all right. We're going to end it. We are getting close to the end here. Do we have any last words? Do you have any last words? What are your last words you would like to say to the people out there that are listening? Stephanie Lencioni.
Yes.
Lencioni.
Man, I don't know. It sucks and we get it. It sucks. We get it. But make sure you've got someone who, I don't know. Sucks. I will say this. You say something.
I will say this.
It sucks.
Get quotes.
Get quotes. Yes.
If you get something that seems too good to be true, it probably is, because everybody's expensive right now. And if you get something really, really cheap, it's probably not going to pay when you need it to pay. Because we have those companies, but we don't write through them, but we have access to them.
Yeah, I would. Okay, so that's what I would. Okay, that's a good one. I'm going to feed off that and just say because we've even told people, hey, we encourage you to go out there and look, because it's not just we don't have access to good good companies. Mm-hmm. It's a tough market. And then give us if you're with a broker, if you have a relationship, this is what I would, if you have the relationship with your current agent or broker, at least give them the opportunity. Go out and shop and that's fine, but then give them the opportunity to compare. Mm-hmm. Give them that much, because it's hard. It's hard for us as the agent, as the broker. And I understand it's hard for you guys to write the check. I am the consumer writing the $6,000 check, and that's hard, even though I'm the broker and I get it and I understand. But give your person, if you have the relationship, if they've earned your trust, give them the opportunity to at least say, let me at least show you where the discrepancies are, right? Like,
correct.
Whoever that is, obviously Panatella wants people as clients.
Correct.
But we don't want clients in the wrong way. But just give everybody, give your broker a break and give them the opportunity to walk you through the differences. Yeah. Both of them, right? And then go to your new company and say, okay, well, then I want you to walk me through the differences from this policy to this policy, and you'll sniff out who's full of shit. And from there, you make your best decision.
I hope that people sniff that out.
But if they don't, then that's on them. Yeah. And but just give people the opportunity.
Yeah.
And then again, we're not here to spend anybody's money. It's your money. Make the decision that's best for you at that point.
Yep. I agree.
That's all we can do. That's all we can do.
Well, thank you all for joining us. It's been another episode of Insurance Gone Wild. If you have questions or comments, please reach out to us at contact@igwpodcast.com. You can also give us a call at 817-753-0093. We'd be glad to answer your questions, or if you have a subject matter you would like to hear us talk about, please reach out to us and let us know. Thank you so much, and we'll talk to you next time.